Have you ever noticed something strange about modern financial advice? We're told that two incomes are the solution, that dual-income households are safer, more stable, more responsible. And yet, when you look around, many households with two full-time incomes feel more stressed about money than households did decades ago with just one. Not poorer on paper, not irresponsible, just tighter, more fragile, and more anxious. So the uncomfortable question is this: if two incomes are supposed to mean security, why do so many two-income households feel like they're one missed paycheck away from trouble? This video isn't about blaming couples. It's not about saying one income is morally better than two. It's about understanding how the system quietly reshapes your life once two incomes become normal. A normal, realistic scenario. Let's start with a situation that will sound very familiar in the US or Europe. Two people in their late 20s or early 30s, both educated, both working full-time. One earns about $4,800 a month before tax. The other earns about $4,200. Together, that's $9,000 before tax. After taxes, healthcare, social contributions, and deductions, maybe around $6,200 actually reaches their bank account each month. On paper, that sounds great, comfortable, even above average. This is where most advice stops. But real life doesn't. Where the money actually goes. Because now expectations adjust. Rent or mortgage isn't $1,200 anymore. It's closer to $2,200 because two incomes can afford a better area. Two cars are no longer optional. One commute becomes two. Car payments or leases add up to $900. Insurance, fuel, maintenance, another $500. Student loans or credit cards, around $600 combined. Before groceries, before savings, before anything optional, you're already down to about $2,000. Groceries for two adults, $900. Phones, internet, subscriptions, $350. Basic social life, occasional eating out, small comforts, $500. Now you're left with roughly $250. Two incomes, two full-time jobs, and almost no margin. That's not bad planning. That's the math of the modern two-income setup. The hidden mistake no one explains. Most people assume the problem is spending. Too many subscriptions, too much convenience, too many small indulgences. But that's not the real issue. The real issue is that two incomes don't double security, they double fixed costs. Once two incomes exist, the system quietly reassigns them. Bigger housing, two vehicles, higher baseline lifestyle, higher expectations from banks, landlords, employers, and even family. Your life becomes designed around both incomes being permanently available. That's the trap. Why this feels rational at the time. None of these decisions feel reckless. A nicer apartment feels earned. A second car feels necessary. Better childcare, better location, better convenience, all reasonable. Month to month, everything fits. And that's the key psychological hook. Modern financial life trains you to ask only one question. Can we afford this monthly payment? Not, what happens if one income disappears? Not, how flexible does this keep our life? Not, what does this cost us in resilience? Just, does this fit right now? And because it does, it feels responsible. The psychological reason people fall into the trap. Humans are wired for stability today, not resilience tomorrow. When two incomes arrive, the brain relaxes. There's less urgency, less perceived risk, more willingness to lock in commitments. At the same time, society reinforces this constantly. Housing markets price for dual incomes. Car financing assumes dual earners. Childcare, education, even social norms quietly expect it. So the reference point shifts. What used to feel like enough starts to feel small. What used to feel like extra becomes normal. Not because people are greedy, but because normal itself has moved. The real cost of the two-income trap. The danger of the two-income trap isn't lifestyle. It's fragility. If one income stops due to burnout, layoffs, illness, pregnancy, family needs, the system doesn't adjust gently. Fixed costs don't care. Rent doesn't shrink. Car payments don't pause. Loans don't soften. Suddenly, what looked like abundance reveals itself as dependence. And that's why many two-income households feel anxious even when everything is working. They're not wealthy. They're leveraged. The long-term impact if nothing changes. Over time, this creates a quiet pattern. Raises don't create freedom. They reinforce commitments. More income leads to slightly better housing, slightly newer cars, slightly higher fixed costs. The margin never grows. So even after 10 or 15 years of working harder than ever, many households realize they don't have options. They don't have time. They don't have flexibility. Just obligations. A different way of thinking. Now let's shift perspective. Financially intelligent households don't reject two incomes. But they don't build life assuming both incomes must always exist. They treat the second income differently. Not as lifestyle fuel but as flexibility insurance. They organize life so that one income can cover most fixed costs. Not comfortably but survivably. The second income creates savings, time, breathing room, choice, not immediate upgrades. Why this mindset changes everything. When fixed costs are low relative to income, stress changes. Job decisions become rational. Career shifts become possible. Family needs become manageable. Money stops being emotional. This isn't about sacrifice. It's about who the system works for. A system built on permanent dual income rewards spending. A system built on flexibility rewards resilience. The quiet truth about security. Most people think security comes from earning more. In reality, it comes from needing less certainty to survive. Two incomes don't automatically make you safer. They only do if at least one of them is optional. That's the difference between income and security. Closing thought. If you're in a two-income household and feel tight, anxious, or stuck, pause before blaming yourself. This isn't about poor decisions. It's about a system that quietly adjusts expectations faster than most people realize. Once you see the two-income trap clearly, the pressure lifts. Not because the answer is simple, but because the confusion disappears. You don't need extreme solutions. You need a clearer scoreboard. And if this way of thinking helped you see money more clearly, you might want to subscribe.